I explained you till now, if capital accounts are fixed, we prepare one capital account and the other current account. If the question is silent, then we must assume that capital accounts are fluctuating. We only prepare accounts by fixed capital account only if it is mentioned in the question. Otherwise, it is always fluctuating capital account. Right? So how it is prepared? I will do it at the board. But in brief, I am telling you, this is the combination of fixed capital account and the current account. We add both the accounts all together. Means all the information of fixed capital account and all the information of current account are combined in the fluctuating capital account. Right? So I am preparing it at the board C. Capital account, right? Same way, particulars. One thing I should tell you, sometimes, rarely, we have to make a date column also. Only when it is given, dates are given, that capital introduced during the year and date is given there. So we might have to make one date column also. Keep in mind, whether accounts are fixed, current or fluctuating, we might have to make a column for date also. But if dates are given in the question, otherwise in 99% question, we prepare it in this way only. Right? X rupees, Y rupees, particulars, X rupees and Y, rupees or dollar or whatever currency you are using, you may write there. Once again I am telling you, we might have to sometimes make a column for date also. But if it is necessary, you are given dates for salary, for drawings, for introduction of capital or for various things, right? Otherwise 99% we do it in this way only. Current account, it is a fluctuating capital account. Here, the balance of capital may be debit also and credit also. As we have done in the current account. Current account balance was debit also, credit also. Same way in case of fluctuating, capital balances may be debit also or credit also. By balance brought down, credit. If some partners are having debit balance, to balance brought down, debit. Right? This depends. Maybe one partner is having credit balance, others are having debit, or vice versa. It is also possible that a partner may introduce capital during the year. So when capital accounts were fixed, we used to show it only in the fixed capital account, right? Not in the current account. But if the accounts are fluctuating, So if he has withdrawn the capital or introduced the capital, everything will come here. See how. By cash, bank or assets account. It is for what? Capital introduced. Capital introduced. Right? Same way he may withdraw the capital, right? To cash, bank, maybe assets. Withdrawn. Right? Now these things we used to do in the fixed capital account also. Here we'll club fixed and current account. So next balances of the next entries of interest on capital, salary and commission, etc. In this case there is no current account balance. If capital accounts are fluctuating, then there is no issue of current account. Remember this thing. So by interest on capital, there will be no interest on current account because there is no current account. If the capital accounts are fluctuating, then there is no question of current account. Right? Then by salary or commission, as I told you, we may write separately salary here and commission here. Alright? Now, what else will we get? Share in the profit. By profit and loss appropriation account. Profit. And this side, whatever drawings he has made, 2 drawings. Drawings made during the year, right? Remember this thing. 2 interest on drawings. Alright? So here we write if he has withdrawn capital, if he has taken for the personal use drawings, then it is withdrawn permanently. It is given there in the question that he has withdrawn, he has reduced the capital. In many questions you will have to do the adjustments regarding the reduction of the capital. Okay, so 2 cash, if the capital is withdrawn, 2 drawings, if he has withdrawn for the personal use, 2 interest on drawings as interest on drawings is charged to the partner. This side once again, balance by cash, if he has introduced capital in the business or in the form of cash or bank or assets, interest on capital, partner's salary or commission, and profit and loss appropriation account. If you match it with the entries, you will find that this is totally based on the entries. For example, for interest on capital, we used to do the entry interest on capital account debit to partner's capital account. So how will you show it in the capital account? By interest on capital. For salary or commission account debit to partner's capital account. How will you show? By salary or commission. For share in the profit, again, what we used to do? Profit and loss appropriation account debit to partner's capital account. So by profit and loss appropriation account. In case there is a loss, we will write this side to profit and loss appropriation account This is in the rare cases. If appropriations are the charges, I will tell you about that. है ना? If it is not appropriation, question says these are the charges, then only we do it. Again, it is very simple to balance. If this side is more, we'll write 2 balance brought down. If this side is more, by balance, sorry, it is carried down. Please note it. It is carried down. By balance carried down. And this totaling is done. For those whose balance has come this side, we'll write 2 balance brought down. This is debit balance. This is debit balance. For those having balance this year, by balance brought down, and this is credit balance. Right? It is possible in the fluctuating capital account. Some may be having debit balance, some may be having credit balance. I'm just briefing you once again. It's a combination of capital account and the current account. As we write in the capital account balances, we have written it here. We write capital introduced there, we have written it here. We write in the current account interest on capital, we have written. Interest on current account is not here. Salary or commission, there we write, here also we are writing. Share in profit, there we write, here also we are writing. Same way balances. Here again, balances may be debit also. Then capital withdrawn permanently, it will come here. Drawings made in the current account, it comes there also. It is coming in this account also. Interest on drawings and profit and loss appropriation loss. Right? And the balancing is done. It is so simple. In the next session, we'll do the problems. But please learn it, see this video again and again, understand everything, and talk to me in case of your problem. Right?